N. Good morning, everyone, and welcome to today's market analysis. We begin by looking at the overnight external market performance, which saw a significant rebound in risk appetite, undoubtedly sending positive signals to the A-share market today. Data shows the Nasdaq 100 index surged by 1.35%, closing at 648.85 points, while the VIX index, a measure of market fear, simultaneously dropped by 2.56% to 17.48. This combination of tech-led gains and declining volatility clearly signals a risk-on environment, which is expected to directly boost sentiment in A-share technology growth sectors. However, in the commodities market, we're observing a starkly different picture. WTI crude oil prices saw a sharp decline of 8.06%, falling to $82.59 per barrel, and COMEX gold prices also dropped by 2.02% to $4,780.80 per ounce. The rapid fall in key commodity prices reflects a swift unwinding of geopolitical risk premiums, indicating a cooling off of short-term inflation trades. This will undoubtedly put significant pressure on A-share resource cyclical stocks, such as those in oil and gold, which are expected to open lower today. From a macro and currency perspective, the 10-year U.S. Treasury yield has moved lower to 4.25%, which is favorable for the valuation recovery of global growth stocks. The U.S. dollar index, DXY, remains steady at a high of 98.27, posing slight pressure on emerging market capital flows. However, it's worth noting that the offshore RMB exchange rate has stabilized at 7.2635, effectively alleviating concerns about capital outflows. Therefore, the overall impact of the macro and currency environment on A-shares is relatively neutral, but structurally beneficial for growth stocks. Turning to futures and funding signals, the FTSE China A50 index futures rose by 0.62% in the night session, closing at 12,480.5 points. As a leading indicator for the A-share market, the rise in A50 futures suggests upward momentum for a higher open. Combined with the positive external market sentiment, we believe there is a 75% probability of a higher open for the A-share market today. Based on the analysis, given the strength of U.S. tech stocks and the pressure on domestic commodity prices, we anticipate a significant divergence in internal market forces. Funds are expected to rotate out of resource cyclical sectors and into technology growth sectors. Therefore, today's market is highly likely to exhibit a divergent structural trend, with a probability of 0.85. Specifically, for sector predictions, we believe that AI computing chains and semiconductor equipment sectors will outperform the broader market. The core driver for AI computing chains is the spillover effect from US tech, with Nvidia rising 1.91% and the overall Nasdaq 100 index surge providing strong external catalysts. Its probability of outperforming the market is 0.80. The semiconductor equipment sector benefits from the 10-year U.S. Treasury yield decline, which improves the pricing environment for high-valuation sectors, and also from the overall recovery in tech sector risk appetite, with a 0.75 probability of outperformance. In stark contrast, the oil and petrochemical sector is expected to underperform significantly due to the 8.06% plunge in WTI crude oil prices, which directly impacts the sector's earnings expectations and will trigger risk-averse selling, with a high probability of 0.90 for underperformance. Given this outlook, our opening strategy for today is to chase strength. This strategy is applicable if, after the open, technology growth sectors show significant volume and strength, while resource cyclical sectors clearly weaken. However, it's crucial to note that if oil, coal, and other resource sectors do not fall but instead stabilize and rebound after the open, and tech stocks open high then fall, then the chase strength strategy becomes invalid, and we should revert to a wait-and-see approach. Regarding individual stock directions, we recommend focusing on AI computing chains, semiconductor equipment, and the new energy vehicle industry chain. Finally, we offer several verifiable predictions for today. The CSI 300 index has a 60% probability of closing higher today, with an expected increase of 0.4% to 1%. This is primarily driven by the rise in tech heavyweight stocks offsetting declines in resource heavyweights. The STAR 50 index is predicted to outperform the CSI Energy Index with an 85% probability, with the STAR 50's daily gain expected to lead the CSI Energy Index by at least 2.0 percentage points. The overall market is expected to show significant divergence characteristics with an 85% probability. And the oil and petrochemical sector as a whole is likely to underperform the broader market, with a high probability of 0.90 for the sector index to fall by more than 1.5%. In summary, we judge today's market to have a 55% probability of an upward trend, a 35% probability of consolidation, and a 10%